Hello, everyone, and welcome to the December 2023 retirement account review for Jane's account. So we'll be going over the final year numbers, and let's jump into it because my goal is to continue getting these videos condensed down. I'm not a financial advisor, and I don't claim to be one, and it does not reflect the views or opinions of my employer. I do hold a number of positions that are similar with John and Jane, and I do have the ones listed for Jane on the screen. And it is a real portfolio with actual shares being traded. It is not a practice portfolio, which is why I include so many screenshots to try and demonstrate that it is real. Why I do this, I really need to get to making a video that goes over this so I don't have to go over it every time. But basically, John and Jane were being taken advantage of, in my opinion. And after we talked about their retirement accounts and what they had, they decided that they liked the idea of managing their own. So I will do my best to get a video made for this so we don't have to go over it every time. In that same video, I will also work to get this part addressed so that we don't have to go over every time. But basically, John and Jane are both retired. They both collect Social Security, and they also draw $1,700 a month from their taxable account and $1,000 a month from John's traditional IRA. They do have other investments outside of what I help them with, which are primarily, minimal risk bonds and CDs and things of that nature. And then they do have no debt or monthly payments other than basic recurring bills. So our headlines for the year, or I guess I should say for December anyway, is that the IRA generated about $2,770 of dividend interest income for December of 2023, and that compares with $2,185 for December of 2022. And then the Roth IRA generated just over $1,000, and in December of 2022, it generated $1,643 of dividend and interest income. In the traditional IRA, there was a balance of $447,000 for December of 2023, and that compares with $415,000 in December of 2022. And the Roth IRA had a balance of $213,000, and that compares with $203,000 for December of 2022. So Jane had a total of 7 companies that paid increased dividends or special dividends during the month of December, and there were no companies that decreased their payouts. So the companies that announced their increases, or I should say paid their increases, include Broadcom, which is AVGO, Enbridge, which is ENB, EOG Resources, they paid out a $1.50 special dividend. Honeywell was just under 5% increase. And then for Main Street Capital, they continued their normal small increases and then supplemental dividends. OBDC, they're going to do a supplemental dividend of 8 cents a share. And then SU, which is Suncor, was a 4.8% increase. And the increase I have noted on the screen is registered in Canadian currency, since obviously that's going to fluctuate in the translation to US dollars. So for AVGO, with them, so I've started doing this on all the videos, but basically in total, Jane has collected $444.15 of dividends from them since December of 2022. And after the dividend increase, the current position is set to produce $231 of dividend income annually. And obviously, as you can see, it's sitting at a pretty sizable gain. We bought a lot of that position was in preferred shares that converted back from when the price was pretty low during COVID. So for Enbridge, you can see that we have a pretty sizable position in Enbridge. There's only a small chunk of it that's currently sitting at a loss. I mean, it's near a break even. But in total, Jane has collected just over $4,700 of dividends since March of 2020. And after the most recent dividend increase, her current position is set to generate $1,444 of dividend income annually. And then for EOG Resources, in total, Jane's collected $81 from EOG. EOG, as you can see, is still a pretty small position. We actually recently sold off some of the shares just with energy prices having started to fall, looking for a better entry point for what was the higher cost shares on that. But the payout here was the special dividend, but there's also an increase that will be paid in the month of January. And then for Honeywell, in total, Jane's collected $735.30 of dividends since March of 2020. And then after the most recent increase, the position is set to provide $172.80 of dividend income annually. And then for Main Street, this one is also sitting on some pretty sizable gains, but is also one of the highest dividend producing positions. And the reason why it's so much higher than what the annual amount or annual expected amount is that this annual expected amount does not include the supplemental dividend that they commonly pay out. So it's paid $4,930 in dividends since January of 2020. And then after the most recent increase, position set to produce about $1,340 of dividend income annually. And again, that does exclude the special dividend. With Jane, she holds shares in both her traditional and in the Roth IRA. So in the Roth IRA, in total, it's collected $1,440 of dividends, and it's set to produce just under $500 annually moving forward. And then for Blue Owl Capital Corporation, in total, Jane's collected $243 of dividends since July of 2023. Part of the reason why this didn't go back further was because they did the name change then. So in this case, the dividend that was paid was the special dividend, and the normal dividend will end up being received in the month of January. And then for Suncor, in total, Jane's collected $119 of dividends, and moving forward, the position's set to pay out $163.96 annually. So for the December trades, you can see here that we sold out of the position of Avient. I've mentioned this in some of the previous videos that this was the higher cost portion of the shares. We had been recently building up the position in the lower $30 share range until recently when the market took back off again. So basically trimming this back was the final step here because now everything is at a much lower cost basis than where the share price is currently. Added another $10,000 to the Schwab money market. And then regularly we purchased the shares of BME. That was a good entry point because now the shares are hovering in the upper 39, I think low $40 share range. And then for LyondellBasell, we added another 10 shares here. The stock price is starting to move up closer to the exit point for some of our high cost shares, looking for about $102 a share to be able to trim back what I believe is about 25 shares remaining. And then, as I mentioned with EOG Resources, we sold off these shares here because these were the higher cost shares relative to the $108 cost basis that the other 10 shares were at. And then for the Roth IRA, you can see that we added more to ADC. Wish it would have added a little bit sooner, but I still think it's a good entry point. What we're adding here is the lower cost basis shares, and then we do have some that are in the upper $60 share range that we'd be looking to trim back here in the future as the price continues to climb. And then another $15,000 was moved to the Schwab money market. A lot of the movement for the money into the Schwab money market just has to do with dwindling buying opportunities with the market just the trajectory of it, of share prices and things like that. We'll be looking to pull money back out of the Schwab money market if buying opportunities arise. It's important to remember that because this is a mutual fund, it's going to be something that when you go to take funds out of it, it does have a delay with it. So that's part of the reason why we don't just have a lot more money sitting in that account. And then as far as the realized gain loss, we can see here for the month of December was that we did take the loss on Avient here. Could have held out for a little bit more, but it was what I felt a reasonable exit point, especially now that we have such a low cost basis established with it. And then for EOG, you can see here that we sold it for a few dollars over what our cost basis was. And so that's where it kind of canceled out. In terms of the gain loss. And then for the Roth IRA, there was no sales that were made, so there was no gain loss to report. And then for the year-to-date numbers here, while it showed the 16% gain loss ratio in the traditional IRA, for the year you can see here that we've taken a lot of gains off the table. So that's going to be in the form of I believe like Eaton is a big one. We sold off some shares of Broadcom, but there were some big winners that we sold out of. And so essentially every time we made a sale, the way I kind of think of this number is that 90 cents for every dollar of what we sold resulted in a gain, whereas 10 cents of everything we sold resulted in a loss. So that's a pretty substantial gain. There's a lot of activity here, and that's why there's so much money sitting in CDs now in Jane's traditional IRA. And then as far as the Roth IRA goes, still a pretty substantial amount of change here. You can see that actually this one was closer to 97 cents for every dollar of shares sold. 97 cents was a gain, 3 cents was a loss. Definitely took quite a bit of gains off the table in the Roth IRA as well over the year. And then to compare December year over year, so the Charles Schwab money market and CD income represents a huge shift where the income is coming from. We eliminated IBM and then also shares of NLY preferred Series G. And then the reduction in size of Broadcom, also in Cummins, and then in WMB, Williams Brothers. Sorry, I was drawing a blank on the name there. But then we increased the size of BME, which you saw in the trade history that we recently added to as well. Crown Castle International, Enbridge, and then OBDC was previously ORCC before it did the name change in June that I was talking about. So that was, we've increased or at least added to that position overall as well. And then for UMH Realty. And then also we did add EOG, but it is a relatively small position after the recent sale. And then for the Roth IRA, so ADC, RNP, and NextEra Energy were increased significantly in size. We eliminated AVGO from this portfolio. We just sold out of it completely. It was a smaller position than what was in the traditional IRA. And then for GLOP Preferred Series C, sold out of that one as well. That was higher yielding preferred series debt, but honestly was happy to get out of it due to some of the volatility. And then also with adding Suncor, and then added more shares of T-Row in this. And actually, sorry, I should say this position of T-Row was established. T-Row was only previously in John's Roth IRA. So interest income from CDs and from Charles Schwab Money Market is going to represent a sizable amount of the income moving forward in the Roth IRA. And then year over year full comparison. So now that we have our full numbers in, you can see that it is, I have the word estimated. Sorry, too late for me to go back and change that. But basically, 14% is what the traditional IRA is up year over year. And at the end of November, we had expected somewhere in the neighborhood of 10.9%. So that tells you that the $2,769 that it came in at was substantially higher than what we had originally projected. A lot of that is going to be coming from the CD and money market income, which is things that I do not count typically in those projections. And then the estimated originally for the Roth IRA was 5.6% in November is where we were thinking we're going to end the year at, and we ended up at 9.1%. Some of that is going to be from special payouts at the end of the year. As you can see here, hitting $1,000 is not something that we planned for. And even though the income was less in December of 2023 than it was in 2022, it was still higher than what was projected. So that's kind of an important thing, that even though it was a sizable amount less, there was a really big capital gain that was taken as from one of the funds, I believe was from RNP. And so that's where the substantial difference in the dividend, in the income was there. But nonetheless, it still produced more income year over year, and that's the part that we measure. And then for the account balance, so month-end balances are up considerably year over year because of the recent market rally. Even with the end of the year rally, you'll notice that the average balances are basically flat year over year. A difference of about $2,500 in the traditional IRA on average, and closer to about $3,000 difference here in the traditional IRA. It's in favor of 2023. In the Roth IRA, it's in favor of 2022. But there's no withdrawals that have been made. In Jane's account, everything is collected as cash and no funds are taken out of her account. So the 6-year comparison, December was the second highest income producing month on record. The only month to beat it was June of 2022. So that's always a very nice thing to see. Jane's traditional IRA income has managed to grow by more than 10% every year for the last 5 years straight, as you can see down here. So this is really doing what we want it to do. In that sense, I would say 10% growth every single year, over 10% growth every single year for the last 5 years is something that there's zero complaints about that. That's absolutely phenomenal, especially because the account balances are higher than where they were previously as well. The account produces an average monthly income that's more than double the amount it produced in 2018. Now, the caveat with 2018 that I like to point out is that this was the first year that funds had gotten shifted over. So as you can see, the jump in these earlier months in particular was pretty substantial, even though later on these numbers tended to be more in line. But I always like to tell folks to take that with a grain of salt. Because yes, it was more than double this, but it isn't what I would say is a full year. 2019 is going to be the first full year that I would say results can technically be measured by. So when we get to double of that, that'll be the real indicator of how fast income is doubled. And then for the Roth IRA, July and December were 2 months where income produced exceeded 1,000. Previously in 2022, there was only 1 month that exceeded that, and that was in the month of December. And that was again due to a very large gain that was taken off of RNP that was paid out at the end of the year. So in this case, this is the first time dividend income, dividend and interest income did it on its own without necessarily having some massive special dividend payout that caused that to happen. And then as far as the Roth IRA goes, it's grown by nearly 10% in 2023. didn't have nearly as good of results in 2022, but you'll also see that the growth in these 2021 and 2022 helped compensate, and so the dividend growth has been on a similar trajectory in that sense as the traditional IRA. But the account produces an average monthly income that's more than double and nearly triple, actually, the income produced in 2018. Again, caveat, that early on in 2018, this income wasn't up to snuff because we had just established these positions and just started deploying money to be invested. So, but we are getting close to where it'll be double the income of 2019. In fact, it actually might pull it off in 2024, depending on how things go. So that's pretty neat to be able to see. And then for the cash balance comparison, so trade activity slowed. I've mentioned this previously, and so the movement of cash into CDs and things like that has, in the Schwab money market, has more to do with the fact that there's just not buying opportunities. So cash balances on here do not reflect the money held in money markets or CDs. There's currently 110,000 in money markets or CDs in the traditional IRA, and another 30,000 that are in the Roth IRA. And then for the unrealized gain loss comparison, we can attribute some of the decrease in unrealized gains to the number of positions sold that were sitting at large gains. So as I previously mentioned on the year-to-date gain loss, that there were some pretty substantial gains in both the traditional and the Roth IRA. And so part of the reason why we probably saw it go negative here was because those shares, it had been sold out of those shares. You could also make the argument that if those stock prices had been down, it may have been actually even more negative. But nonetheless, I think that that's part of the reason why we saw it not appearing as high as what we saw here, is because we sold out of some of those. We're going for a less volatile approach to generating income while still generating a solid income in the process. So in a nod just to how volatile the markets have been, the Roth IRA saw its first negative gain loss month end since November of 2020. And that's a reminder of why we focus on investing for income and not for capital gains, because capital gains are not reliable, but income, as long as you're buying the right investments, at least has the potential and ability to be reliable or be consistent, which is why I chose the name Consistent Dividend Investor. So we've returned to a positive gain loss in both accounts. The traditional IRA isn't increasing as quickly, is what I meant to say here, because $110,000, or approximately 25% of the account balance, is currently held in CDs and Charles Schwab money market. So that's an important thing, I think, to note, is that if the market continues to rally, I expect to see the Roth IRA gain speed faster than the traditional IRA, and that's just because these investments are the kind that don't go down, but they also don't go up. And then for the current gain loss, so as I've always said, I think it's a really important table, because this makes it so that I can't hide the bad, even though I'm showing you the good, right? So in this case, you can see both sides of the coin. And then really, we have 3M, Crown Castle, and then Lumen, which is formerly CenturyLink, represent the positions that are most underwater. And then on the same, our opposite end, we have Broadcom, Eaton, and then Iron Mountain, which represent the highest potential positions for capital gains. But that's what adds up in total to where we are here. And these numbers are updated as of January 3rd, and the current yield on this portfolio is 5.11%. And then for the Roth IRA, so with this one, also these numbers are updated as of January 3rd. Current yield is sitting at 4.86%. And Altria and RNP represent the most underwater positions currently. And then Bank of America, Concentrix, and then Main Street Capital represent the highest potential positions for capital gains. So the conclusion here, situation remains similar to what I've talked about in my recent videos. Cash balances have increased, and a lot of it just has to do with whether or not there's a compelling risk reward element to holding those shares longer. The Federal Reserve's announced potential interest rate reductions up to 75 basis points in 2024. A lot of people are viewing this optimistically, and personally speaking, I don't see it. I don't think that inflation and the employment numbers justify that. And also that with the status of the auto industry, especially with some of these manufacturers starting to realize that the losses that they're taking in electric vehicles are not paying off, at least not in the short term. There's going to be a huge shift within the auto industry. I mean, I don't think it's necessarily going to be 2008 all over again, but I do think that there's going to be some automakers that really reel back from what's about to happen. So, yeah, don't need to talk about the gains on tax deferred trades. Talked about that before, but yeah, that's really where the portfolio is. I'll make that the fastest video yet, so I'll put that feather in my cap. If you guys like the videos, please feel free to comment, ask questions. Love to get some more feedback going. It'll make it a lot easier to justify how much time I spend on these things if and making videos that's a little bit more engaging in terms of not just being PowerPoint slides. Yeah, the YouTube algorithm has not been super favorable. So anyway, anything you guys can do, thumbs up on the videos, things like that, I greatly appreciate it, and I hope everyone has a great day and a happy and wonderful 2024.